Hello, everyone, and welcome to this week's podcast for November the 15th. We're actually recording this on the 14th, but we'll be releasing this on the 15th. And it's been quite another interesting week. But before we get into that, it's nice to be on a podcast again with you. It's like the
Yeah,
Clark Brothers podcast. We
again,
get to
yeah.
interrupt this every once in a while.
Well, it's nice to have you through coming back in. So for those of you who don't know, David is what do we say, super hybrid maybe? Like
Yeah.
it's super hybrid. He comes in, so it's always nice to come in and a little bit of an inside joke. He always says, "Miles, what are you doing for lunch?" And I'm trying to eat healthy, but of course, if you've ever been down to Richmond, we've got ZZQ, we've got Easy Burger.
Too many good food
You could
options.
put down the calorie intake in a week, probably in
Mhm.
in over the course of an hour. And so, I bring my lunch, my little packed microwavable lunch, and David's like the
And here I
devil.
am
Yeah.
devilishly over
Like,
over on your shoulder,
like,
like
what are
we
you
should
doing?
go get we should go get a massive burger
It's
right
like,
now.
yeah, we shouldn't, but then we end up doing that. So I don't know. We're recording this before lunch, so we might have an option today to figure out what we got.
Where
But
this might be one of the days I actually brought lunch, ironically. But digressing on that,
market stocks, man.
markets,
What are we
things that are
looking at?
going on. We're
Yeah.
continuing to see, I mean, most US equities continue to march higher. If anything, as we were sitting here talking about it, it was sort of like, okay, there's still a lot of continuations of themes week over week,
Yeah.
but really the theme difference this week versus last week is now everything is in either an overbought extended position or inversely in an oversold and really sort of down position and on its chart. And we were sort of scrolling through charts and it was almost as if one we would look at was just extended and it's like, well, you're probably going to do this here,
Yeah.
and one would be down and in oversold territory and you're probably going to do this here. So that was going to end up being that's going to be our general theme of the day, is sort of what do you do when you're looking at something that's overbought or something that's oversold.
Right.
And we're going to mainly go through a lot of just the indices or here in many ways, so we won't get into too many specific like individual stock positions, but I mean in many cases when you're looking at a point and figure chart, a lot of these rules will apply similarly.
Right. Yeah. I mean, you get you're if you're listening, I'm sure you've got clients that are calling in, post election. Maybe some of them wanted to wait on the sidelines and now they're having a little bit of FOMO, or, they were fully invested before the election and now they're like, well, shoot, what do we do? We've got nice gains. I mean, you and I were just talking before. You look at the major indices we typically look at. Russell 2000 since the beginning of November up over 7.5%. The S&P 500 up nearly 5%. I mean, you're getting what you would get in a year, historical averages. You're getting half of that in
Two
2 weeks,
weeks
right? So like this
and
is
less than that. And
yeah.
actually, if we really
Yeah,
pinpointed
so
it.
this is a historical type of, you get these gains every once in a while, but for a lot of us it's like, well, what do we do? Do we go buy in right now? Momentum sometimes suggests that you would, right? But then there is kind of an art to the, or I guess there's an art to the
There's
science,
an art to the
art
science.
to the
Yeah.
science. I was going to say art to the madness, but I think that
Art to
exists
the
too.
science is the right one.
Whatever. But it's like, how can we look at charts and actually go and go about things smartly, if that's a
Mhm.
word as well? How can we go out and properly diagnose what markets are throwing at us?
Well, I mean, our main culprit probably right now in terms of looking at an extended index that's at least somewhat pulled back from overbought territory, but still sitting well, at least some ways above support, is going to be the Russell 2000. I
Right.
mean, that's been under the microscope for everybody, as it's been on a tear, like you said, up over 7% since the beginning of the month. And while on its chart, we've seen it get up to match its all-time high there at 2440 and match the top of the trading band. We've seen a little bit of an exhale here, which some might just sort of knee-jerk think, all right, here's the pullback.
Right.
Here's what we're looking for. But in many cases like this, you can even look back at other instances on the chart. What we're really looking for is either some level of chart normalization or just kind of consolidation at current price levels, just to not only allow the market an exhale, but give ourselves a breather and an opportunity to sort of get our bearings for a minute.
Yeah, and we'll throw the chart up on the page. I mean, I remember back at the beginning of 2024 and kind of like in the first half, small caps weren't doing anything and the markets were ripping, right? And the Russell 2000 conversationally just kept getting stuck around 2000, right? Now we're definitely above those levels, but on these podcasts, we would go and talk about look for old resistance, look for, where markets have told us before bulls or bears aren't interested, right?
Mhm.
And so in my mind now, what that level has become, instead of 2000, we're now graduating to 2300, right?
Mhm.
That's old. That's an old point. We'll highlight it on the chart again. That's an old point where bears, or excuse me, where bulls were not interested above those points. We thrust through that on the back of the election. Now we're getting a little bit of a pullback. I'm very, very, very interested to see if we want to defend 2300. It's a nice even round number. It's also a point of stiff resistance from earlier, this year. I want to defend that if I'm a small cap bull.
Well, and in many ways, it's not like coming back to 2300 as far as chart movement is anything all that bad
Right,
per
right.
se. I mean, and that's the thing is if anything, it pulls us back into sort of a normal stance on our 10-week trading band. If we're able to hold support there and reverse higher, I mean, that as far as technicals go, that's sort of checking those boxes that we're looking for and hoping how you approach this or how you might look at it is we're looking for sort of pullbacks, where do things settle, and then a reversal higher from there is what we're
Right.
monitoring for in many cases. And that'll be a common theme on probably a lot of the charts we're going to talk about today, but they're still kind of individually their own unique things that are going on in the market right
Yeah,
now.
I've actually got a question for you. I'm interested in your opinion on this. An area that's been a leader throughout 2024 so far, the Nasdaq 100, that's actually not that overbought at the time of this recording, at least. How should we be playing the Nasdaq 100? Of course, momentum would say it's a relative strength leader. It's on three consecutive buy signals. Is this an opportunity for clients to go and actually add allocation to something like the Nasdaq 100, or should they be holding money on the sidelines in case we get more of a broad exhale? What are your thoughts?
So it's interesting to sort of look at both either the chart of NDX or the Qs. And that in truth, both obviously moved to new highs here recently, have maintained buy signals, but in many ways, with sitting on that threshold of 60% near a high, I mean, I could at least say in my head, all right, I'm going to wait to sort of see where we pull back and settle to.
Right.
Now, if this were just say a normal breakout and it were 60%, maybe I would treat that a little bit differently. But part of me would just maybe wait for, and I don't even know that it has to be a wholesale pullback on the chart. I mean, and that's some of the things that I think whenever you're looking at the art of in behind the science here, that's sort of where a lot of times we talk about looking for that verbatim reversal into O's, and more often than not, yes, that's what we're looking for, is an actual price to move for somewhere. Or in the case of moving into X's, we're looking for that price to move above a certain threshold. But when we're looking at sort of trying to time trades and you're monitoring a chart that maybe hasn't reversed down yet, but you're watching that weekly distribution or that weekly OBOS reading, get into more of a normal range, then you can maybe change your tune a little bit
Mm-hmm.
because now what was extended, say weeks ago, is becoming more normal for us. So
Right.
it's giving, again, in essence, a time for the market to take its breath as well as us. And
Yeah, and that's an interesting point that you brought up about the breakout because, you and I all day long we look at support and the other part of support is resistance, right?
mhm,
And all-time highs, well, half that equation is kind of gone, right? Like
right,
there is no resistance because we're at all-time highs. And so kind of intuitively, like in order to do our job, we almost need to not be at all-time highs because we need to we need a point to say,
we
well,
need a
this is the
point to,
point, this
yeah.
is resistance, right? And so I think it also makes sense, you're up near heavily overbought territory at all-time highs. There is definitely a prudent argument to say markets are due for a little bit of a reversal. I do get your point about just seeing some normalization, which is completely fine as well. But
Mhm.
there's also a lot of room for constructive reversals in the current market setup. You look at QQQ, for instance, we go back to the Russell 2000 and IWM. Those areas, while they are a little bit extended, they all have, marketable support levels towards the downside. That would be
Right,
constructive. That would be
correct.
constructive.
Mhm.
So there's a lot of room there. I don't know where I was going with that, but that's the general gist.
Well, and I mean, as we're talking about many of these charts, people are probably going to hear us refer to this as being constructive or being good for the chart. And it's more about us conveying that this is a chart action you can monitor for and that you shouldn't have any type of like, oh crap,
Right.
I've done something wrong. That's really what a lot of what we're conveying. And I mean, it's going to be a theme on every chart we pretty much look at here
Yeah.
today. So, and kind of shifting gears a little bit to another asset class and that continues to be under a microscope today because we'll have Fed speakers later is going to be fixed income, and we've seen
Right.
rates uptick, and that can then sort of segue us into our dollar conversation that we'll probably wrap up with. But looking at the chart of the 10-year yield right now with yesterday's action, we actually saw it reverse back into X's up to that 44.5, or technically it's 4.45% is the
Right.
way you read the chart. But that's been a pretty stiff level of resistance that's been in place since June.
Hmm.
So interesting to see that coming, especially when you look at even some of these like longer dated treasury agency funds. I mean, they're really in oversold territory. So this is coming to overbought territory. You're seeing a lot of that longer dated stuff move into oversold territory. So conversely, and that's sort of where we're continuing this theme. In either case, we're looking for normalization or an exhale out of the chart to see where it may fall. But the interesting part about the 10-year yield chart is really support, quote unquote, for the 10-year yield is pretty close by there. So, I mean, the potential that if we were to see rates, see that resistance there, act as a key level again, and ultimately rates fall down, we have a potential sell signal set up there at 4.25%.
Right.
Whereas, we've seen a pretty good uptick over the past, say, month and a half, but really that brief exhale we got now put us in a position where we've got a potential for a closed sell signal if we see downside action in rates. So, I mean, it's kind of an interesting chart setup, and in some ways constructive that if we were to see rates move lower and we now have some level of sort of signal close by that gives us comfort in knowing that all right, we're maybe moving lower at this point.
Yeah, I mean, David and I are naive, right? Like we know that there's much more in play than a PNF chart on rates,
Exactly.
right? So of course, rates did move higher. What was the catalyst, right? What was the catalyst for rates moving higher? Well, after Trump gets elected, maybe you've got a little bit of an idea that some policy that could be implemented might keep rates a little bit higher for longer, or maybe cause a little bit more of an inflationary precautions, right, which would need to keep rates a little bit higher. We're certainly not making any political calls on policy or anything like that. That's just the market's interpretation of what they're seeing. So
Mhm.
support and resistance is notable, certainly, but there's definitely a lot more in play, as you mentioned, the Fed speak, different odds of cuts and things like that. Inflation readings, which we got one today. Or was
Came
that
in
yesterday?
line.
Or was it
No,
today or
we got one
yesterday?
yesterday and today.
Yeah,
So we
came in
got,
line. So things seem to be fine, but of course, next week things could change, right?
well, and that's
Uh,
part of it is it sort of seems like as we move towards the end of 2024, it's like every week there's going to be something that's almost like the quote unquote big day. I was going to
mhm.
make another reference, but there's a certain organization that gets mad about that. So
Right.
we'll move on.
Well, you
Um,
talk about higher rates. What's that going to impact? Of course, fixed income, which you mentioned. It's also going to impact the dollar, and it's also going to impact gold. Where do you want me to start? Which one? Do you have a
yeah,
preference?
let's do gold and we'll wrap up
Okay.
the dollar.
Okay. So for gold, gold is typically looked at as a safe asset, right?
Mhm.
So the point is, you look at gold for maybe a hedging piece or something like that, and holding gold is fine. For those of you who have it, you hold it in little coins that you put in the safe, maybe under your mattress, whatever it is. And that's fine, that's an asset. But the opportunity cost of holding gold is higher when rates go up. So higher rates or rising rates is actually a headwind for gold because, well, if you're looking for safe assets, your options are either gold or going to the US Treasury. And when you can go get a higher rate on your US Treasury bills, the opportunity cost of just letting the gold sit underneath the mattress is higher. So we've also seen gold tick down. It's down about 5.5% since the start of November. gold's been a relative strength stalwart within the commodity space. I don't think that we're sounding the red alarm on the precious metal
Yeah,
quite yet.
no, not quite yet.
But yeah, it's been a notable downtick, return to a sell signal there, and of course then you've got some if rates do stay higher, that could be an additional headwind for the space in the near term.
Well, commodities, broadly speaking, have sort of been taking a step back over the past month or so.
Right.
And I mean, driven by both gold and crude is sort of the
And the
big,
dollar.
yeah. And that ever looming piece that sort of acts as the headwind is the dollar. And
Right.
that's our last topic we were going to talk about today. Because we've seen some pretty notable action over the past really week. I mean, the move in the dollar started middle of last month in October when it reversed up off of lows there near 100, and I mean has since pushed higher at this point with yesterday's action technically right at close, almost right at close when I was looking at it earlier this morning. It moved above 106.50 to return to a buy signal and also flip that trend back to positive, which for the longest time we talked about the dollar tends to trend.
Right.
Well, the past 12 months has
It
thrown a
hasn't.
monkey wrench in that.
Yeah.
And this has been one period in which, in the past 12, rolling 12 months, we've had four trend changes. And yesterday I was looking back through this, and there's only been one other time going back to even 19, I think it was 1975, which is where we have data for the US dollar. And it was from September of '08 to March of '09 that we saw four trend changes in the dollar. Now, what I find interesting about that is by no means does this environment feel like that
Right.
in any way, shape, or form. So it's interesting to see that we're seeing so many trend changes in what generally has been a positive environment for a lot of assets. I mean,
Right.
so it's really kind of interesting to see that transpiring. But digressing on that point, we're also seeing the dollar come up to resistance at this point. We were talking about support and resistance earlier. It's coming up to a pretty key level of resistance that's been in place for pretty much 2 years now. And like many charts we've talked about, is getting into overbought territory.
Right.
And
Yeah. I mean, you get this idea, like you mentioned, tend to trend. It hasn't trended there. And I would say at this point, what we're more interested in rather than the trend break, or at least what I'm more interested in rather than the trend break. Sure, that's conversationally useful, but you look back at that level at 107.5, 107, dating back to late 2022. That seems to be a point where it just kind of greenback just kind of runs out of steam. So sure, conversationally, dollar being in a positive trend is notable until it proves to me that it actually wants to trend in that direction. Then I'm going to say, hey, actually,
stop bouncing around between
yes,
here,
yeah.
100,
Hey, make up
107.
your mind, right?
Yeah. Make up your mind. Well, and even looking at some of I talked about it getting into extended territory and sort of where it's come up to that resistance, but this is the most overbought, interesting little factoid that the dollar's been since post-election 2016. So,
Right.
is there some coincidental irony there? Absolutely.
Right.
It also is kind of interesting to even look at right now, like you said, I mean, without a move to 108, we're sort of at this point
Right.
potentially stalling out,
Right.
And what transpires from here. I mean, we've seen international equities react and really move to the downside, but do we see the exhale and the next leg up for the dollar? Or is this sort of another one of those phases that we've seen over the past 2 years in which we get a rejection of resistance and it falls right back down to 100, where we continue this range bound action. But I think moving into 2025, it'll be interesting to see if we have some fodder for maybe that to kick through.
Yeah, another one I'm interested in 2025 is Bitcoin. Is it going to hit
Mm.
100,000, you think?
Lord, I feel like Bitcoin, anytime you think of like an astronomical amount that it might hit, and like you're like, there's no way it's gonna hit this, it's probably gonna hit
Someone has
it.
projection that's probably higher, right? I've seen
Right.
like,
Yeah.
they're like, oh, you sitting in your room, this is like a meme or whatever, you sitting in your room alone at night saying that you didn't buy Bitcoin at 90,000. Now it's at like 3.6 trillion. You're
Yeah.
like, okay, well,
Or, I mean, even then, I'm sure there's somebody out there looking at 2025 and calling for like Bitcoin 500,000 or
Right.
something like
Yeah.
that. I
And
mean,
just to wrap up our conversation on overbought, maybe some of you have clients that are, calling in about Bitcoin and are having serious FOMO now that, it's up past 92,000 at this point. Um, Historically, we have seen exponential moves from Bitcoin, right? We're no strangers to that. But just to put it in perspective, weekly overbought oversold reading for Bitcoin right now is at 158%. Now, for regular stocks, regular funds,
right.
that would be, wow, this thing is really extended. For Bitcoin, last time we saw that was, let's see, a level higher than that was 2021. So it's 3-year highs. But at that point, we got up to 200 or excuse me, 350. So point is, Bitcoin
Right.
can get pretty dang overbought, right? So
Yes.
we can see it kind of continue to run. This isn't something that just because we have seen it run up means that it needs to fall out of bed. It can get more overbought than what it is.
Mhm.
So,
Well,
anyways,
and in many cases, I guess technically we can say many of these things could get more overbought than they already
right,
are,
right.
but there's also a number of them that, I mean, stuff going to new highs, we're likely to see that pull back at some point in time. In case of the Russell 2000, we've already seen a little bit of an exhale with Wednesday's action as it reversed down into highs, but at this point, it's sort of let's wait for our breather.
Yeah, yeah.
And I mean, I think one of the things to convey to clients is as hard as it may seem, and I totally get it, we're on a podcast talking about this, so you may just push this off, but patience in certain environments, especially when markets are at highs, is a virtue. It's not like it's good to remind clients that, hey, we don't just see price continually run up every single day from here.
That would be nice.
Like it would be amazing. Everyone would love that. We would all be millionaires,
Just no
but
down days ever.
that's the thing. It's one of those that we get ebbs and flows in the
Yeah.
market. So there, at some point in time, there will be an opportunity that if they've got assets sitting on the sideline, they'll be able to put them to work. But right now is not the time.
Right. Yeah. No, importance of not chasing. I mean
Yeah.
that's what you get into. There is a momentum is going to chase probably more than some other factors will, just inherently
Mhm.
because it buys winners. But again, as I mentioned earlier, it's about, being smart about how you're doing it. So finding normalized levels, buying into strong names on those strong pullbacks, keeping some cash on the side just to maybe deploy when needed, and remembering to keep your eye on the chart and the bell icon for alerts.
Yeah. Well, I think we covered quite a bit today, mostly around one particular topic, but hopefully this is helpful to really kind of give some context and maybe some talking points that you might be able to take with your clients. But you got anything else?
I don't. Let's eat, man.
Yeah, it's lunchtime. So we appreciate you guys joining us this week. As always, stay tuned for next week when we'll record then.